Okay, Jim, welcome to Landlords Corner radio show. It's WJBX in Southwest Florida, 101.5 FM. And I really appreciate you being a guest here and being willing to share your valuable knowledge in real estate. Well, I'd like to welcome our special guest, Jim Ingersoll, here on Landlords Corner radio show. That's WJBX Southwest Florida, 101.5 FM. Jim, thank you so much for coming on the radio show. I've been looking forward to this for a while, and welcome.
John, it's absolutely an honor to be here with you and your regular listeners today, and it's very humbling to be on with you. So thanks for inviting me to join you.
I really appreciate it, and there's so much knowledge that you have to share. I see it on the internet all the time, and you've got an excellent web page that is always sharing real estate knowledge for real estate investors and people who are interested in doing all kinds of things. And that's, I guess, what I'll be asking you about today.
Yeah, I really look forward to it. It's a great time to invest, as you know, and people should be capitalizing right now. So it's certainly an honor to talk about it today.
Well, Jim, I'm going to start asking you some questions, and maybe you can talk about this. And first, I'll start off with, why would you want to invest in real estate without needing a bank?
Well, the first reason, John, is because real estate, even at the prices we're at today, are still a very capital-intensive investment. By the time you buy a house, you go through and you rehab it and fix it all up and make it look really nice so you can rent it out or flip it or whatever you're going to do with it. It still costs a lot of money if you're going to use your own cash. And so a lot of people try to rely on a bank, but with a bank, you've got to have good income, you've got to have good credit, and you've got to have money for both the down payment and for the rehab on the house, depending on the type of financing you need. So if you're able to remove that constraint so that the average person that's listening right now is able to invest in real estate, they can make a killing if they can get out there and do that. But that is the number one struggle they have, is the financing on the house. If they could figure that little piece out, a lot of more people would be investing right now and doing really well. So the reason you want to do it without a bank is so you don't need to rely on your own credit. You don't need to rely on a loan officer or credit application or your credit report. That way you can go out there and build a rental portfolio or do some fix and flips or whatever it is you'd like.
That's great. That is very excellent. Funny thing about bank financing is when you need it, they don't want to lend to you, and when you don't need it, they're more than willing to lend to you.
It is so true, isn't it?
Yes.
It is. It is so true. They make it so difficult for real estate investors in particular, because, you know, a lot of landlords that may be listening right now may have great income, but because of the huge tax benefits of depreciation and things, they show very little reportable income on their tax return. And these banks, they don't understand that, so it makes it difficult to lend them more money to allow them to go out there and put assets to work.
Right. It's so true. That is. And the nice thing about seller financing and creative deals is that you get to save all those closing costs that the bank would normally charge you.
Yeah, absolutely. Especially, say a hard money lender in particular is very expensive money to use. It's very high interest in 4 to 6 points, which is 4 to 6%. It's a lot of money.
That is.
And so if you eliminate that, you can put more money in your own pocket and build your cash flow and your net worth the way that you want to do it by working directly with the seller. I agree with you.
Jim, tell us about why a seller would want to be your bank. What are their benefits?
Well, the benefit to the seller is oftentimes a fast sale, number one. Isn't that one of the keys to a really good real estate deal is what's called a motivated seller?
Right.
A motivated seller is somebody who's got an urgent need to sell, and they're willing to give and take through the transaction a little bit to get it done quickly and easily. It may be kids that inherited a house that's free and clear, or it may be people that have to relocate because they're in the military, or it could be that they're falling behind in their payments because, they lost a job. It could be a number of reasons why they need to do this, but they can sell it as is. They don't have to put a sign in the yard with a realtor and do open houses and get it ready and go through all of that. They just want a quick, easy sale. And sometimes, besides the closing cost, the seller can also get a higher price if they're able to help you with some seller financing.
That's so true. I've done a number of deals like that too. And years ago, I kind of stumbled on it by accident, but it's something other investors had been doing too. But I realized that by making the terms really work well for me with long-term secondary financing or long-term primary financing held by the seller, they're very impressed with the higher price. And when you don't have to pay that full payment and the seller is holding back a mortgage for you, you're able to give them a higher price in the offer, even though over the long run it's a much better deal and you may be actually paying 0% interest or however you wind up making it work out creatively in the end. But that's very impressive to a seller because that's what they're going to share with all their friends, how much they actually got on the sale.
Right on. So a lot of real estate investors are beginning. There's a lot of new folks that are investing, and they're taught one way to make an offer. It's based on the after repair value, how much repairs the house needs, and then you just go through a very simple calculation. It's based on the loan to value, and you make one offer. And if the seller can't make it work or won't make it work, they walk away from that lead. Whereas if your listeners are paying attention today, they can figure out how to connect some dots and maybe close more deals that they're currently walking away from. And that's what seller financing's about, because it's a way to create cash flow and equity when other people are walking away from it. And the seller gets what they want, which is exactly like you said. Oftentimes it could be a little bit higher price, and the investor gets what they need, which is a cash flowing asset for the long term.
And it turns out to be a win-win deal that way. Everybody's happy.
That's why I love them. It is a win-win deal, and there's a lot of different ways you can structure them. You might be able to do a subject to deal and take over the payments. Maybe you do a lease option, which is kind of like seller financing in disguise. Maybe you do, if they own it free and clear, maybe they'll hold the note and give you 0 or 2 or 5% interest. Maybe you can buy it with nothing down. Maybe you could buy it with a deferred first payment, so the first payment don't start for 90 days. You can literally craft and design custom terms any way that you can negotiate. Now, you're not going to typically find these off the MLS, but when you're dealing with a motivated seller and you don't have people throwing in multiple offers because you're sitting in their kitchen, on their deck, or in their living room talking about what they need for their house, you can custom design those terms. One of the things I ask, John, a lot of times people ask me, why would a seller ever want to do that? And beyond just price, quick sale, as is, no home inspection, no open house. Another thing is I'll typically ask the seller, like, what are you going to do with the money? And if they say, well, I would just put it in a bank, well, then what's your interest rate? Because in a CD, you're going to earn about 1%. How about if I give you 5 to 6 times what a bank's going to pay, and you can make a really nice return off your asset? It's like the gift that keeps on giving, month after month after month. So there's a lot of ways to carve out the deal so everybody wins, just like you said.
And it's just a matter of understanding their situation, like, when you take the time to explore what their real needs are, you can figure out the best way to help them.
Absolutely. That's what it's all about, is helping people. And that's why a lot of times when I sit in the living room or dining room or on somebody's screen porch, I ask them, what's important to you in this sale? And seldom do they say price. Usually it's easy sale. I don't want to have to I don't want to pay commission. I don't want to have to do any repairs. And then price is not usually a big consideration, but if it is, you can craft that in as well.
It's such great information, Jim. Thank you for sharing this with everybody. Jim, let me ask you if you'd like to share any types of offers. I know you went through a few of the ways you can buy. If you'd like to share any
Sure.
ideas.
If they own it free and clear, the hot buttons for your deal typically are down payment and price. And we talked about price. But if you can amp up your down payment a little bit, you'll have an easier time getting them to agree to do the deal with you. So there's probably half a dozen creative ways you can make an offer. One of the ones I like, John, is what I call the 50-50 offer. And the 50-50 offer means I'm going to give you half your money right now when we close, and then I'm not going to make you any payments for 5 or 6 years, and then I'm going to make you the other 50% at that point. Now what that does is it makes them feel warm and secure because they're going to get half of their money right now. Say they want $80,000 for the house. I'll say, all right, John, I'm going to give you $80,000 for the house. Nobody else in this market is going to, but I'm willing to do it. And the way that I'm going to do it is I'm going to give you $40,000 when we close in 10 days. And then I'll give you the other $40,000 in 5 or 6 years. So it gives them a nice big down payment. And during those 5 or 6 years, you don't have any mortgage payments. It's sort of like having it free and clear from a cash flow perspective because you don't have to make any payments. Then at the end of that term, you either got to sell it, refinance it, or be able to pay them back the final piece. So that's one of the ones I really like.
That's a good one.
You can always come back and say, all right, you want $80,000 for the house. I'll give you $80,000. Here's how we'll do it. Let's do $400 a month for 200 months. I gave you full price for your house. And by the way, if you need a nice down payment, how about if I prepay the first 6 months, $2,400, so that you've got a nice chunk of money when we close. But then I get my deferred payment also, which gives me time to rehab the house and get it occupied, first payment in 6 months. See, by deferring the payment and incorporating that, they perceive that as their down payment, and they're happy. And then you get 0% interest on that offer as well. So there's 2 of them that I would really like to offer. You could always come back and say, how about if I give you $3,000 or $4,000 down and I'll give you 6 or 7% interest. You can really carve these things up any way you want. I like to make 3 offers, John, and then I will say, out of these 3 offers, which one works best for you? Because it's all about them.
Right.
And then they'll identify one. It's either cash, 50-50, no interest, whatever it is. I'm good with any of them. And then we sort of focus on that one and see if we can make a deal.
So yeah, that is great. I've always done it that way with the 3 offers where we would find out which works best for the seller. I would always make 2 very unattractive ones.
Yeah, that's a good strategy.
The one that I wanted, but I would really try to solve their problem and go with the
That's what it's all about.
Work best for everyone.
It's all about solving the problem and making the deal work for them. Let them choose how the best solution to the problem, because sometimes we don't know.
Yeah, and sometimes they may not tell us everything that
they never do
going on. Now, Jim, how does a joint venture work?
Well, a joint venture is another creative way of buying real estate and building out a rental portfolio without needing a bank credit or any cash. And when you do that, when you buy houses without using your own money, you're leveraging to the max, which from an investor standpoint means your return's up close to an infinite return. That's why I love the real estate. You can leverage it like you can not leverage any other investment. And the way that a joint venture works is you're going to leverage somebody else's cash. So they're going to bring in the money to the deal. You're going to bring the deal to the table, and the 2 of them become a joint venture. So a lot of real estate investors are really good at finding deals, and that's where they need to focus. It's a specific skill set to find a motivated seller, negotiate it, get it closed, and then rehab it and get it so that it's cash flowing on a monthly basis using all of your great landlording techniques. That's what real estate investors are phenomenal at. And there's a lot of people with money problems right now that would love to participate. They don't have money problems because they don't have money. They have money problems because they're worried about preserving their capital. They're worried about CDs that don't even return the inflation rate right now, let alone inflation in general. So if you've got a way for them to park some money or take some lazy money out of the stock market or find some cash out of a home equity line of credit or a retirement account, they're happy to come into the joint venture, and their piece is to bring the money to the table, and the real estate investor's piece is to bring the deal to the table. Both pieces of that joint venture are very, very critical to this overall success, and from there they can share some cash flow, they can share some upside equity, and really do this for typically between 2 and 5 years.
Back in 1987, I attended a seminar called The Challenge with Robert Allen. And I remember one of the things that I never forgot that he was saying is money is attracted to great ideas.
Ooh, boy.
And that is just like with the real estate investors who are finding the deals and pulling the money to it by bringing the investors in.
That is a great point. Everybody needs to write that down. Money is attracted to great ideas. There's opportunities all around us, just people don't see them. They need to get some new glasses on so they can take a look at all the opportunities around us because they're everywhere.
That's so true. Now, Jim, also I wanted to ask you, as far as getting private capital for buying rentals, can you tell us about some ways to get that, some sources? Sure.
People have access to capital that they don't think about. So if you talk to somebody about participating in a real estate deal with you, they'll oftentimes say, well, I would love to do a deal with you, John, but really I don't have any excess capital right now, so I can't really do anything. But, you know, a good percentage of the houses in the United States are already free and clear. So they could take out a line of credit at, say, 3% and lend it back to a real estate investor at, say, 7% and make money monthly on debt financing at about a 4% clip that easily. Another really big source is CDs. There's billions of dollars sitting in CDs right now earning 1 or 2% or less. And the myth with a CD is that once it's in there and you're on a 3 or 5 year term, you can never touch it. Well, you can break your CD, but you're going to have to probably pay a prepayment penalty. Well, my experience is those prepayment penalties are not very high. So a crafty real estate investor who wants to do some deals with some private capital could find somebody with money in a CD, offer to pay the prepayment penalty in exchange for investing the money. So there's another big one is certificate of deposits are a horrible investment and a big opportunity. Another really big one, John, is self-directed IRAs. There's, again, billions of dollars sitting in 401ks and retirement accounts right now that the big myth with them is that they only can be invested in stocks, bonds, and mutual funds. But the truth is you can exchange to a different type of custodian and do what's called a self-directed IRA. And a self-directed IRA means the account holder can pick between a huge variety of investments, including real estate, including in notes and mortgages, and buying real estate or buying a rental, all the things we do outside of in everyday life as real estate investors can be done in a self-directed IRA. So if you wanted to lend money or buy an apartment complex or any of those things, you can do it very easily by understanding a few basic rules about self-directed IRAs.
That's awesome. That's really creative too. So many different ways of finding money.
Well, when you take somebody from a 1, 2, or 5% return and you put them to 6, 8, 9% return, knowing the power of compound interest, you're literally changing their financial future by providing them a really nice, strong return.
Now, Jim, I noticed that you share a lot of great information on Facebook also.
Thank you.
Real Estate Investor Success page?
That's our Facebook group. People can also just find me on Facebook is fine. I love sharing your stuff, John. You got some phenomenal teaching on being a landlord. I love that stuff.
Thank you so much. I'm trying, and trying to educate landlords. That's what we need to do so that we won't end up in so many bad tenant problems. And a good part of my life was spent dealing with nightmare tenants. They, kind of turned my life upside down for a few years, and I had no choice but to either, if I was going to stay in this business, I was going to have to learn how to deal with it the right way and be able to protect ourselves. And that's how I wound up creating a website for it from all those bad experiences.
Yeah, no, and you're absolutely right. Absolutely right. When I was in my early 20s, I dug in and I bought a duplex, and my property management philosophy was after I was done working my job as an engineer, I'd meet a tenant, and if they had a pulse and a deposit, they were in. That's a bad system and a horrible strategy because I didn't know any better. And so we had to dump the duplex, and my wife swore to me, John, she would never be a landlord again. It took me 10 years to get her back to being a landlord again. And when I came back in, I used systems and processes, all the things that you're teaching everybody. But that 10 years, I will guarantee it lost me at least $1 million by doing it wrong. So your listeners need to jump on your opportunity.
I see it all the time too. Thank you so much for saying that too, Jim. I just see so many people. I've heard it and I still hear it. People say, well, I'm done being a landlord. Even people who contact me who are interested in learning, or they want to know mostly how to get money back from tenants who owe them money. And after they say, after this, I'm done. I'm done with this landlord business. And I'm like, well, why? You don't have to be. You can turn it around. I turned it around. And but some people just don't believe. They just feel like, okay, I'd rather just quit and lick my wounds and never look back.
Yeah. But and the people that refuse to come back in, I love buying their houses. Burned out landlords are a really good source for me to buy houses at a really nice discount.
Exactly. They're your best.
With some systems and processes, landlording can be done right.
Exactly. Jim, tell us about your pages that people can visit you at on the internet so that they can contact you.
Okay. Well, I'll tell you what, I've got a giveaway for people at bigmoneyinvestor.com/John. How's that?
Sounds good. bigmoneyinvestor.com/John.
Yep.
Well, I hope
they'll check that out. They'll get a nice swipe file download.
Oh, very nice. That's a nice free gift for you guys that are listening from Jim Ingersoll. Go to bigmoneyinvestor.com/John and get your free download from Jim Ingersoll. I'll also be posting the link on landlordscorner.com along with a recording of this radio show. InvestorSuccessMastermind.com is also a website that people should be checking out. That's InvestorSuccessMastermind, all one word, .com. Check that out to visit Jim Ingersoll. And Jim, that free gift for everyone, that's very generous of you. Thank you so much for doing that. And what else?
Well, like yourself, you want to give and help people avoid the mistakes that I made, just like you were talking for yourself as well.
I'll post that web address on our Landlords Corner webpage that I always ask everyone to.
Super.
Where we'll have the replay of the radio show on there and also the link so people can take advantage of that. So, Jim, thank you so much for being a guest on the Landlords Corner radio show, and I look forward to doing more things with you. I'm really looking forward to that. I think we're able to understand each other very well, and we have the same goals in mind and think the same way on a lot of things.
I agree, John. It's a pleasure to have you in my network, and I'm honored to be here today with you. Thank you for inviting me on.
Thank you, Jim.